If you have a method to determine the directional bias of any currency pair, how would that make you feel? Will it improve your trading or not? Let me know in the comment section. In today's video, I'm going to review with you the strategy I use to determine the directional bias of a market. Why will I be going for a short and why will I be going for a long? And it's not a rocket science. It's something that you all know, but you never pay attention to it. So I'm going to explain to you. So in today's video, I'm going to help you determine daily directional bias and how I go about it. There are different ways I use, but I'm going to share one with you. The other one is for my mentorship student. If you want to be my student, join the Telegram, send me a message, and I will respond to you. So now, this is a simple technique that you are doing. Okay, a directional bias is simply which area you want to be trading. Okay, that is directional bias. Today, as the market opens, I want to be a buyer. That means the directional bias is what? Is to be a buyer. Is bullish. And if you decide to be a seller, the directional bias is being what? Bearish. Now, let me shock you. You can have both bullish and bearish directional bias in a day. It all depends on which angle you are looking at and which time frame you are also working on. So I'm going to share with you exactly how I do that. So now, what I do is simply mitigation. Okay, mitigation of some key supply and demand zones. For example, if I have a supply zone here, okay, and price is in this supply zone, and probably I see a kind of a change of character, then my directional bias will be to sell. Okay, if you notice, I've not said anything about time frame. Okay, this is just my POI here, supply zone. Once I see a mitigation and a change of order flow, then I will switch my directional bias to be what? Bearish. Okay, and if it comes to my keys demand zones, okay, I can switch my directional bias to what? To be bullish, and so on. Okay, till you get to another external supply zone, you can decide to change your directional bias to be what? Bearish, and then bullish and bearish, and so on. It all depends on your POI. Pay attention to your point of interest. They are very, very important. I'm going to share with you a trade example that I took on Friday, and I shared the initial idea with my Telegram channel members, and we had a lot of discussion, and then the trade ended up giving us a good trade. Okay, but however, I will show you how we switch from being a buyer to being a seller. So this trade breakdown is on the pounds USD. Now the pounds USD, as you all know, okay, was in a downtrend, and I was expecting a push to the upside there. You can see this monthly candle closed on the high note. Okay, after taking this previous week, after taking this previous month low, it closed in. So the weekly time frame, we also have a push higher. Okay, but this is not the trade setup I'm looking at. Now, for example, if I want to be a seller now, based on this time frame, on the weekly, based on this time frame, I can be a seller in here. Okay, that means my directional bias might switch from a bullish stance to what? A bearish stance. And now, when you are choosing a directional bias, do not hold it for a long term. Okay, market fluctuates in up and down movement. So when you are going for a directional bias, you ask yourself, this particular directional bias, is it for a scalp? Okay, you ask yourself, is it for scalp? The next one is, you ask yourself, is it for intraday? Okay, and the last one is what? The next one is it for intraday, and the last one is it for a swing trade idea. Okay, because you can have a directional bias, but that is short-lived. It only moves for 30 pips, 40 pips, 50 pips, then price reverses on you. Not that you are wrong in that directional bias. You are correct, just that you did not know that that particular directional bias is for scalping opportunity. Okay, then for the swing trade ideas, you can try to hold that for a long time, and I believe a lot of you are looking for swing trade directional bias for the daily directional bias. No, in a daily directional bias, you want to be selling and buying where necessary. Your directional bias may switch. Okay, now for this particular example here, you can see that the immediate price came up into this hidden base of a sort in the weekly time frame. There was a reaction, and that was the directional bias. If I go to the daily here, this was the setup here where we highlighted this was the setup, and this was a good level. But initially I wasn't looking at this because with my experience I've realized that price can trade very close to this and then reverses. So in the 1 hour I saw a kind of chalk. Okay, now this was what I saw here. This was the point of interest I highlighted, and I shared it in the channel. See, the reason for that is this: it swept this high sweep liquidity and then gave a break of structure. Now I was aware of this for one daily fair value gap above, and then this supply zone. I was very aware of it. Okay, but however, the way I trade when opportunity presents itself to me, and I know when to cut my trade idea. So this was the idea. Initially price came in, went down, creating a form of inducement. So I was hoping that this level serve as inducement for this supply zone for a sell. Now this idea only worked out well for being a scalper, because I took that trade. That, unlike me, I hardly take a trade during the Asian session because by then it's already late here in Nigeria, and most times I decide to spend time with family and then have a rest. But when I saw this, I got engaged. I saw my confirmation in 5 minutes. There are ways I look for my confirmation, which is strictly reserved to my mentees. Okay, aside from the normal chalk, I saw the confirmation and I took a 1 to 3 trade, even though the spread was ridiculously insane. And that's one reason why I don't like trading around that time, around that 10, 11 o'clock Nigerian time. The spread are always so wide. So I took a quick scalp in there. Okay, but what happened, when by the time I closed the trade, woke up in the morning, I saw this price has already left and break above this. Now it's time for me to now focus back on the daily point of what interest. Now as price approaches this is what you need to ask yourself. As price approaches this, is this zone a high probability area to sell from? Okay, are you going to see a reaction here? The reason for that is yes, I can start selling from there. Why? Because I have liquidity feeding into this, making this a high probability area to look for a sell. And you can see we sold from here to this point. I will talk about this movement here because we are looking at the directional bias. Now when price got in here, I got my confirmation in the 5 minutes and I entered the trade. Okay, now as price was heading lower, you can see this area here. This area here was responsible for a push high. Okay, do you understand? And price hasn't mitigated it yet. So we have a form of what? Imbalance here. Imbalance here, and this liquidity feeding into this area. Okay, so it makes sense if price comes to this area here, you can change your directional bias to what? Bullish. And why bullish? Because so far the market has been bullish. We have been bullish. We have been having bullish institutional order flows. The lows are being protected, yeah, and that was the reason why the stance changed from being bullish to being bearish. Now you can see between these two ranges here, my directional bias was to sell, and as price approaches here, my directional bias was to what? Look for a buy. Okay, now bullish in this case, in order to do what? To continue this bullish move. But however, I can see here that we have a kind of 1 hour break of structure, change in order flow, and the rest. So when price comes in here now, what happens? My directional bias will change to looking for bearish movement in price. So that is all. Mark out your high probability supply and demand zones. When price approaches there, that is your directional bias. It's not rocket science. You can start from here, then look further to look for a way to improve and look for other form of confidence. Okay, like me, I have different ways to determine, right from the monthly, the weekly, based on individual candlestick formation. I can use that to determine the directional bias. But for the most simple of it is simply your POI. When price approaches that, like in this case here, we have been bullish here, so it makes sense to be bullish when price comes in here to continue that bullish move. But however, when price gets in there, I have a shift in order flow here, a choke, imbalance above here, which makes this setup very good probability setup. When price trades back in here, I can decide to be a seller. So that is how you use mitigation. This concept is called mitigation concept. When price mitigates at a particular key level, you can anticipate a reversal from there. Okay, for example, as I said, price. So in a nutshell, what I'm saying is that the concept of mitigation should help you with your directional bias. I did a video back then. I'll link it in the card up here. You can watch that video for more comprehensive ways of looking at directional bias. So once market mitigates, okay, you anticipate the reversal from that mitigation zone. That is your directional bias. Then it all depends on the time frame, then to structure if that movement will be for a scalping opportunity or for an intraday or for a swing trade. So if you want to understand more on supply and demand, I will see you in this video.